Welcome to Market Call. We are talking tech with Kim Bolton of Black Swan Dexteritas. The number to call 1-855-326-6266 or email Kim right now with your questions on technology stocks. Market Call at bnnbloomberg.ca. Kim, it's great to talk to you. A lot of talk about vaccines this week. What should investors bear in mind when it comes to any kind of biotech investing? Because obviously speculative, huge risk.
Yeah, there are a lot of moving parts in the market these days, as everyone knows. I think we're at a pretty important juncture right now, whereby, there's been this disconnect between the technology vendors and even their own underlying fundamentals, but certainly a detachment from the underlying fundamentals of the broader market. So I think one of two things are going to happen. Stocks, other than the tech vendors, can rise faster than the tech vendors, or secondly, the technology vendors have got to fall. And we have to hope, and I believe that will be the case, that it'll be the former, that the broader market indices will catch up with the technology vendors out there.
It's just amazing. The vaccines are obviously, there's so many political factors here with any kind of vaccine development, how quickly the politicians will be willing to push forward. Would you recommend investors take a look at vaccine stocks, or should they treat that as mad money, casino money?
Well, it's one thing to find the vaccine with the antibodies. There was the announcement this morning about Moderna, and that was a sample of 45 patients. Now they're going to take it down to Brazil and actually do a phase 3. But then if it works, then they have to go into production. So this is going to take a while to actually come to fruition. We're on the technology side, not particularly on the biotech side. Thank goodness we have some friends on the biotech side. So I don't pretend to actually be that knowledgeable when it comes to the biotech. Technology stocks, yes.
Okay. You have a couple of charts for us, and tell us, we'll put those up, graphics. Tell us what story those are telling you right now. Let's start off with the top 10 strategic tech trends for this year and next year.
Oh, okay. That one, just a sec, I gotta grab it. So the top, you have the top 10 strategic tech trends up in that on the screen. Is that right, Andy?
Yes, I believe so. Yep.
Andy? Oh, okay. Yeah.
Yes, yes, we do. Yep.
It's interesting. So we've talked about this for years and years. You see, the bullseye is digital business. This is what it's all about, and this is what is accelerated come the pandemic. So everyone is racing to digitalize so that they can actually service their customers and service their employees in this contactless environment. And so there are a number of things that are going on, sort of themes around that. There's the merging of the real world with the virtual world. There's all about intelligence everywhere. That's all about smart machines and artificial intelligence. And then there's this whole theme of electrification and digitalization. And then around that, then you have the sectors, from 5G to the Internet of Things to digital twins and so on as you go around that chart. Now, there's a lot of rotation that happens around these themes and the leadership in these themes. So what we do, and you can see it in that outer circle, we put a hedge overlay on top of the portfolio. So currently, for example, Andy, we are 85% invested across those themes and the leadership through those themes and trends. But then we have a 65% short equity indice overlay on top of that invested portfolio. The reason for that, and there are a number of criteria that go into determining how much of a hedge we have, looking at fundamentals and technicals and capital flows and geopolitical events and so on. But right now, we're definitely overweight on our hedge, which means that there's more risk to the downside than to the upside. However, we do get to participate as the market melts up, and we're protected on the downside. I hope that helps.
Just finally, talk to us quickly. We are tight for time on the cloud, on the rapid move to digitization. We have another graphic. How are you playing that trend?
Oh, okay. So about a month ago, Andy, I was on with Paul. And then we talked about cloud-based software. But what I wanted to talk about today was about the cloud being supported by hardware. And so here you have a circle, it's cut in half. On one side, you have the communication equipment. These are the companies that actually facilitate the connecting of data into the cloud or into the data centers. And then on the other side, you have the processors and the networkers and the equipment suppliers, which make up sort of the semiconductor sector. If I go back when I first started out in this business, everyone always used to talk about the transport index as being sort of the canary in the coal mine. But these days, what's really driving the economy out there is the semiconductor. So you got to pay attention to the semiconductor side very, very carefully.
The semis. Okay, we got to take a break. Kim Bolton is taking your questions on tech stocks today. 1-855-326-6266. Warren in London, Ontario has sent us an email. What's your take on Bailin Technologies?
Thanks for the message. We follow Bailin because it seems to be quite topical on the program, but we have not yet invested. But we do follow it. Bailin Technologies. They basically design and then manufacture passive and active radio frequency and terrestrial microwave products. It's currently trading around just over $1. The analyst consensus out there is for a 12-month price target of $1.65. I'll tell you the main reason that we have not bought into it is that it just hasn't been profitable. It's been growing. It's got a market cap of about 150 million, but we just don't own it. No.
Oh, okay. So it's not in the portfolio right now. An email from Christophe Twilio, TWLO on the NASDAQ. Remind us what they do, Kim, and what is your take on it?
Yeah. Thanks, Christophe. This is certainly one of the darlings in the market these days. So basically, Twilio has these APIs that are really the foundation for a lot of enterprise or business digital experiences. In other words, they're providing an operating system for the digital world. And it's been quite important actually to a lot of developers. It's for the developers, it just makes them more efficient and more effective in what they do. So it's right now trading, I think it's around 225. We had a price target and majority of the street around sort of 210 to 220. So it's at just above price target. But, it actually deserves people to follow it because we remain bullish on this right now. But it's so like a lot of these high growth stocks. It's getting expensive. It's trading at 27 times trailing sales, but the revenue growth is greater than 50%, and it's it's something to watch. If you get a correction, this is a great one to actually have on your shopping list.
So an API, an application program interface, and among other things, it specifies how bits of software should interact with each other. Peter in Vancouver, go ahead, please.
Thank you for taking my call. As usual, great
Pleasure.
show. Great host, Andy. Love those two dogs of yours.
You.
They look so pretty.
Oh, thank you.
And
Thank
Mr. Kim Borden, the great manager. Mr. Borden, can I ask you
Hi,
about
Peter.
Ericsson, please? Thank you very much, Mr. Kim.
All right, thank you, Peter. So Ericsson is the stock that we actually picked for the 5G space. The main providers of the infrastructure for 5G are Huawei, Ericsson, and Nokia. And then sort of underlying that on the network side is also Cisco. We really like Ericsson, but you could either go Ericsson or Nokia. But Ericsson has a good track record. The management is very, very solid. And they're getting a heck of a lot of orders on their own, but also in sort of default from the controversy around Huawei and a lot of the Western countries not accepting Huawei equipment into their infrastructure. So we like Ericsson over Nokia, but it's one or the other.
Okay. What do you think, Kim?
Yeah.
Go ahead.
No, I was just going to say I
wanted
think
to
it's
ask
trading
you-
about nine and a quarter, but we have a price target on this of $10.50.
Okay. Kim, sorry. What do you think about these bans on Huawei? Do you think Canada would be wise to restrict the use of Huawei in advanced 3G? Or 5G, I'm sorry.
Yeah. Huawei products are extremely good, and as good as those coming from Ericsson or Nokia. One of the advantages and the reason some of these countries end up going to Huawei is that they're cheaper. The end product and services are cheaper than that of Ericsson. But the reason they're cheaper, and as everyone says, is because of the subsidies that Huawei is getting from the Chinese government. Now, I would think that the Canadian government would probably have the leadership either in the hands of Ericsson or Huawei, even though it's cheaper. But it's going to be a situation that, if you get Huawei equipment in, and then something does happen, you're going to have a difficulty in actually getting the maintenance on that equipment, perhaps later on. So, the alternatives are out there. They may be a little more expensive than that of Huawei, but in the long run, I think it would be best to actually stick with either Ericsson or Nokia.
Andre in Chilliwack, BC, go ahead, please. Okay, don't hear Andre. Shopify is the question.
Oh, okay. Yikes. I think back in, we picked up Shopify back in March, had a price target of 575. Everyone started to move this is in US dollars, everyone started moving their price targets up. We actually sold it, it was like 9 weeks later at 645. And then it just proceeded to continue going along. Like a lot of the great growth stocks in the market in the technology sector, it's not about currently what they're doing. It's about the runway that they have going on into the future. And Shopify still has a great runway and various other verticals that they can get into. But the exponential growth is still in the beginning phases, and valuations and metrics like price of sales, this almost, to me, it makes me think of Tesla back a few years ago when it was it sort of rocketed up, and then everyone was very, very critical and skeptical about it, but then they proved it, and then it's well deserving, but I would definitely have it on the shopping list that if you happen to get a pullback down into even to the 800s, that I would buy it. I'd definitely buy it.
We're going to take a break. Kim Bolton of Black Swan Dexteritas is taking your questions on tech stocks. 1-855-326-6266. We have Carl in Toronto on the line. Go ahead, please.
Hi, Andy. Thanks for taking my call. Kim, Art
Pleasure.
Media for the last 2 years has been a very sleepy stock, pretty much dead money. And then about 3 weeks ago, they started kicking out some news releases. And in fact, they had another one yet again this morning. And suddenly the trading volume has exploded, and it's very much on investors' radar. So I would appreciate your views of all the most recent news from the company and how you see it going forward down the line. Thanks very much. Stay safe. Cheers.
Thanks.
Thank you. This is such an interesting area. We've been following actually Art Media for the better part of a year and a half, maybe 2 years. And yes, it took off. They had about 2 weeks ago, they had an event that they were involved in, and it got some play out there. But then what really, really took off is that there's a hologram stock like Art Media down in the US. The symbol is WIMI. That started to tick up. Everyone started looking at hologram stocks. And then it just started to rocket. Andy, I don't have the price of Art Media, ART. Do you have it handy there?
I'll get it for you.
I remember
I'll get it for you.
Yes.
ART.
I remember seeing
got
it.
40 cents.
Yeah.
It's actually, sorry, go ahead. 40 cents today.
Oh, okay. Yeah. So I think it's up a penny today. So let me just sort of back up what they do. So they're a hologram stock, and they have these devices that allow taking an object, a person, or even an environment, and then taking the image and actually sending it somewhere else in the world and creating a hologram of that object, the person, or the environment. I know it sounds very much like Star Trek, but there's been some new management come in. Larry has taken over the helm there, and he's really working very, very hard to make more of a retail product rather than a very commercial enterprise product that was very, very expensive. So it's become a bit of a momentum. I'm happy to see it actually settle, because for so many years, and if you go back a couple of years ago up until about month and a half ago, it was always sort of trading between 9 and 13 cents, and then it just got this pop because of the event, also some other hologram stocks down in the States. And then it sort of popped all the way up to, I think it was just over 50 cents. But it's nice to actually see it sort of settle in here, sort of in the high 30s and the low 40s. We're watching it very, very carefully. I'm actually going out to visit with them, Larry, the new CEO, in the next couple of weeks. So perhaps next time I'm on, I'll give some feedback from that.
Right. They said actually Monday they weren't sure of what reason would be, what reason there might be, or they don't have an undisclosed reason for the move in the stock. And Larry O'Reilly is the Chief Executive you're
Yeah.
referring to there, of course.
Yeah,
Mark
yeah,
in
Larry.
Gatineau, Quebec. Go ahead, please. I'm not hearing Mark. Mark's interested in the telemedicine sector.
There are a few that are involved in the telemedicine sector. And actually, one of the companies that you might want to look at, although it is a little bit pricey, is a Canadian company. It's called Enghouse Systems. It's up in Markham. And they just made an acquisition fairly recently in a company called Video, and they're involved in the telemedicine industry. And basically, it's a software-based visual communication product that specializes in the telemedicine industry. There are a lot of companies that are trying to participate in this, but Enghouse is actually the real thing. So the problem is that other people also do like Enghouse also. It's currently trading just around $74, and sort of the consensus out there among the analysts, and certainly we sort of agree that the 12-month price target is around $75. So there's not much room in here, but I would also, and it may be a bit repetitive over this show, but I would actually put Enghouse, and the ticker is ENGH, on the shopping list if you can actually get a pullback, perhaps into the 60s.
Okay, we are going to take a break. We're going to get the past picks from Kim Bolton right after this.
Hi there, I'm Paul Bagnall. I'm subbing in for Andy Bell this afternoon here on Market Call. Kim Bolton is our guest. Tech stocks, of course, are our focus, and it's time now to look at Kim's past picks. These are picks that he presented to us on July the 22nd, 2019, so almost a year ago exactly. The first one, a very, very well-known stock. People tend to wonder about is it fully valued or not? That's the perennial discussion around Alphabet, the parent of Google, ticker symbol GOOGL on the NASDAQ, recommended by Kim about a year ago when it was trading at $1,139. It's now trading at about $1,528. That was its close yesterday. That's a return of 34%. Kim, is it worth getting into Alphabet now?
Thanks, Paul. And by the way, hats off to Mike and the team and the production side that you can actually turn this around when something sort of happens in the feed. So here we are, Google. You know, we have a price target on it of $1,550 US, and here it is. It's about 1523. So it's still third largest holding in our portfolio. We'll shave it off if it goes through that 1550, but I don't think we'll sell all of it because it still has a tremendous runway. Google, you know, they made last year, 82% of the revenue came from advertising. And the previous year, in 2018, it was 85% of their revenue came from advertising. But the reason that we like it is that it's not just about advertising. This is why Google is such a fantastic company. You know, think about it. They have, you know, they're the third largest provider out there when it comes to the cloud, next to Microsoft Azure and AWS. Then it's Google Cloud. But then they have, you know, the Pixel, they got the Pixel Watch, they have Google Play on the gaming side, and then the hidden gem is Waymo on the autonomous driving. And they are absolutely the leaders when it comes to the autonomous driving, only because they have more hours than anyone else out there. So I would hate to have to actually sell it off. If it goes through 1550, we'll start to shave away. But I still think this is something that should be a buy and hold in everyone's portfolio.
Okay, that's Kim Bolton on Alphabet, one of his past picks from July 22nd, 2019. Infineon Technologies is past pick number 2, recommended also on that same day about a year ago. Ticker symbol IFNNY on the over-the-counter market in New York. Then trading at $19.22, now trading as of yesterday's close at $25.55. That's a total return, Kim, of 33%.
Yeah. Thanks, Paul. You know, we had to be so patient with this company. So Infineon, they're a Dutch-German company. They're actually now, because they bought last year another semiconductor company out there called Cypress. They're now, Infineon is now the 8th largest semiconductor company in the world. And they're the leading supplier of chips and power management to the electric vehicle and autonomous driving ecosystem. So they're in the right place. We have, you know, our discounted cash flow valuation process actually has a, you know, sort of a fair intrinsic value of just over, well, about $26.25. So we're approaching it, but there's still a little bit more runway left on this, and so it is one of our top 5 in our portfolio.
Okay, and past pick number 3, Palo Alto Networks, ticker symbol on the New York Stock Exchange, PANW, Palo Alto Networks, trading about a year ago when Kim recommended it as a top pick at $221 and change, closing yesterday at $244 and change. That's a total return of 10%. Kim?
Yep. You know, Palo Alto Networks is really, it's the largest when it comes to the cybersecurity side. but it also has a bit of a legacy out there. So we own Palo Alto, but we also own CyberArk in that space. But Palo Alto is the leading network security provider, but it has a lot of legacy side, and maybe not as nimble as some of the others, like a CyberArk or a CrowdStrike. So we have I think you said it was trading just shy of 245. We have a price target, a 12-month price target of 260. So there's still some room for this to go. I already mentioned CyberArk. CyberArk is really the leader in the privilege access management segment of security. So that might also be an interesting one for your viewership to look at. And then finally, the other one, who is a leader in endpoint protection on the cyber side, is CrowdStrike. It's a bit rich, but it's still got a little bit left. It's trading at about 103, and we have a price target on that of $108.50.
That's Kim Bolton on his past picks from about a year ago. They were Alphabet, Infineon Technologies, and Palo Alto Networks. We'll take a break, but when we come back, we'll get right back to your questions for Kim Bolton. Stay tuned. Hi there, this is Market Call on BNN. Kim Bolton of Black Swan Dexteritas is our guest. Tech stocks are, of course, his specialty. And we're now taking your calls. We're back to your calls. Sam is in Windsor, Ontario, and he's our next caller on Market Call. Sam, thanks for calling. What's your question for Kim Bolton?
Hey, good afternoon, gentlemen. How you doing?
Good.
Very good.
I'm a 4-month watcher, first-time caller, and I'm calling about OpenText. I've noticed that it's been pretty stagnant the last few months while other tech stocks have been really rallying. What would it take for this stock to break out, and do you see this happening anytime in the next year? I'm looking to start a new position, so what would be a good entry point? And also, Mr. Bagnall, if I can get a consensus and price target, please. Thank you, gentlemen, and have a good rest of the day.
Thanks, Sam. Paul, where's it trading right now?
I'm going to have to look that up. Begin your answer.
OTDX.
I'll fill that in as you go along.
So this has been very much one of the darlings. We've been very, very patient in trying to get into this, but we always get, it always keeps going up. So OpenText, they are Canada's leader when it comes to enterprise information management. And it offers its customers because it has such a great economies of scale, but it has so many multiple growth drivers in the cloud. And you can see how this drives its revenue, and it actually drives the stock higher. In the third quarter of fiscal year 2020, the company actually delivered great revenue and cash flow growth.
Do you have a price target?
Pardon me?
I'm sorry, I was speaking to the control room. Go ahead, Kim. I apologize for interrupting.
Yeah. So it's had a CAGR of 10.35% over the last 5 years. And I'll tell you, if we ever get a chance to actually buy into it, I think we're going to actually use some options so that we can stick with this stock of OpenText, because it just never gets to our entry point.
Okay, the analyst consensus on that one: 11 buys, 2 holds, 0 sells. We've seen the stock trading at about 57.80. I don't have at my fingertips 62, I'm hearing now, $62 and change is the aggregate price target from Bloomberg on the on OpenText. So 11 buys, 2 holds, 0 sells. The aggregate distilled price target from those analysts of $62 and change on OpenText. Thanks for your first call, Sam from Windsor, to Market Call. Please call again sometime. Let's go back to the phones now. Caller number 2 in this segment is Tom, and Tom is calling from Kingston, Ontario. Hi, Tom. Tom, can you hear me? Okay, Tom was going to ask about, let me see here. Actually, Bitcoin was Tom's question. Can you give us some thoughts on Bitcoin before we move on to our next caller, Kim?
Yeah. Thanks, Tom. You know, this is an interesting place. You know, we have our technology fund, one an LP for Canadians and another one, the Cayman for non-North Americans. But we also have some separately managed accounts. And in those separately managed accounts, sometimes their securities do not fit into our portfolio. And we have a few actually offshore clients that have cryptocurrencies. And so we actually manage the cryptocurrencies over in separately managed accounts. Now, the question is about Bitcoin. We know a fair bit about this. There's two ways you can actually play it. You can actually play it directly into a Bitcoin, but you're going to need a wallet to actually transact in that. And it's a process to actually do that. Or there are some funds out there, some funds actually down in the States, and there's one 3IQ that here on the Toronto Stock Exchange. We haven't bought into the funds because they actually trade at a premium. And the reason that they trade at a premium is because they become more of a trading vehicle rather than an investment. So the bottom line, where I'm getting at, the bottom line, if you're looking for a cryptocurrency like Bitcoin as an investment, I would recommend that you actually buy the underlying cryptocurrency, the Bitcoin. If you're looking at it as a trading vehicle, I would definitely go to one of the funds, but respect the fact that you're actually going to be paying a premium. Now, if one of those funds actually trades so that they actually come to fair value of the underlying Bitcoin or go to a discount, that is when I'd actually use the 3IQ or some of the Bitcoin funds out there as an investment vehicle. Hopefully that made sense.
Okay, thanks a great deal. That was for Tom in Kingston. We didn't get to connect with Tom by the phone, but he wanted to know about Bitcoin, and there was Kim on Bitcoin. Our next caller, Jason in Halifax, Nova Scotia. Hi, Jason.
Hello, can you hear me?
Yes, I can.
Hi, Jason.
Hi, I was looking for Kim's thoughts on Digital Realty Trust.
Okay, Digital Realty Trust.
Yeah. Thanks, Jason. So, Digital Realty Trust, DLR is the symbol. We have owned it. We don't own it right now. And basically, DLR, Digital Realty, is in the data center business. And the three that we like in the data center business are Digital Realty, CoreSite, and the one that we actually currently own is Equinix. And Equinix is an interesting story, especially these days, because they just partnered up back in May with BCE, and they actually raised $1 billion. I forget how much of that billion that they actually used to partner with BCE, but they took on the maintenance and ownership of 17 of BCE's data centers across the country. You know, Jason, if you own digital realty, I'd stick with it. If you're looking for something in that data center space, I'd recommend that perhaps you look at the Equinix side. It has a long history, and they really approach it in a neutral fashion. They are well known for getting acquisitions. So they've had, gosh, I'm just reading here. They've had acquisitions all the way from $67 million in a company called Iconic, all the way up to $3.6 billion, which was the Telecity Group and Verizon. And then they had this pretty big one with BCE recently. So they have a long history, well-managed company. It is spread around the world, North America, Europe, Latin America, Asia. They're very, very strong in Southeast Asia. So I'd even recommend that you look at Equinix. Now, it is a bit pricey, and it's currently trading around $722, and we have a price target on here of $740. So there's still a little bit of runway, but I think everyone should actually have one of these three data centers in their portfolio of Equinix, DLR, or Corsair.
We'll leave it there, Kim. We're going to take a break and come back with more questions to Kim Bolton after this break. He specializes in tech stocks, and he'll be with us right after this break. Welcome back. This is Market Call, the Wednesday edition. Kim Bolton is our guest. He's a portfolio manager with Black Swan Dexteritas and an expert in tech stocks. It's time now for Kim's top picks. These are his top picks on this day. Top pick number one, Kim Bolton, is Dropbox, ticker symbol DBX on the NASDAQ.
Thanks, Paul. It was a bit challenging coming into this because, as I said right at the beginning of the program, a lot of the tech sector, particularly the software, but even some of the hardware, are getting very, very close to price targets. So the three that I picked today still have some runway left. So Dropbox, I think everyone knows about it. This is the storage company, but why buy it? It's got that remote work orientation. A lot of the users are using it for free, but they have over 600 million users in their ecosystem. And that is the challenge, to actually monetize that. But you've seen a lot of companies be able to do that. But the other section, the other part that they're getting involved in is into the enterprise. And they've actually purchased a company that brings a security software, and so it's getting some traction within the enterprise, and they also have that e-signature that is coming out. Lastly, on Dropbox, this company actually makes money, and the company has a goal of hitting $1 billion in free cash flow within the next 3 years.
Okay, Kim, we are short on time, so let's see if we can do, let's devote about 60 seconds each to the next two. The next one is Elastic NV, ticker symbol ESTC on the New York Stock Exchange.
Yeah. All right, Elastic, currently trading just over $89. We've got a price target on this of $97.50. What is Elastic? It's a search company. It provides solutions for enterprises, for companies, to log, analyze, and observe the events in a secure environment. Valuation is in line, and this is something that you could actually just sort of hold on to. Last one, Lemonade. This is the one that actually had an IPO. Lemonade, currently I think it's trading around $76. We have a price target on this of $96. Respect the fact that this actually was an IPO. Was it last week or the week before? But it came out at 29. Here it is at 76. Traded all the way up to 89. But this is the only pure play insurtech startup in the market. Yes, there are some out there like EverQuote and SelectQuote that are sort of like, they're sort of similar to versions of in the insurance space of like an Expedia or Booking.com. But Lemonade is different because using that analogy, that yes, it does searches, and it actually searches for insurance for homeowners and also for renters. But it's different from those other ones because it's almost like it owns the hotel itself instead of actually booking and reserving out there. So what I'd recommend here is you should get it on your radar. Just figure out how much you'd like to invest in Lemonade, only put down 20%, and then average in about every $10 because the stock will come down. But I think this is going to be, this is a disruptor in a huge, huge industry of insurance. And it's well managed, they can make money, and I think everyone should have it on the radar.
Kim Bolton, thank you so much. He's with Black Swan Dexteritas. He's helped us understand tech stocks over the past hour. We thank him for being our guest on today's edition of Market Call. That's it for us on today's show. We're going to hand things over to Amanda Lang in Bloomberg Markets right about now.